Hey, good afternoon, everyone. My name is Jeanmonod, Regional Vice President of Sales here at Angel Oak Mortgage Solutions. Thank you for joining us. We're going to get started here in about a minute. We've had a big registration for this webinar. We're going to go into deep dive into our debt service coverage ratio program. I'll introduce our subject matter experts in about a minute, and we're going to get started in a minute, I said. And this is going to be recorded. So if we don't get to any of your questions, we will have your AE reach out to you no later than tomorrow, and the recording will be sent out no later than tomorrow morning. So hope everyone's having a great month. All right, still people logging in. And we're going to do a deep product dive into bank statements on October 12th at the same time today. So just FYI, we have a bunch of other webinars coming up too, so we'll get those out to you guys the minute we have more information on those. A lot of people still logging in. So today we're gonna cover debt service coverage ratio, do a deep dive. We're gonna talk about what we like to see or not see on the 1003, what we want to see on a credit report. We're gonna go through some tools we have for getting pricing and getting a pre-qual to us, and then last but not least, we're going to talk about our marketing portal and how to help you grow your business. All right, still a couple people logging in, but let's get started here. Again, my name is Jeanmonod, Regional VP of Sales here at Angel Oak Mortgage Solutions. I'm going to introduce our two subject matter experts and let them tell you a little bit about themselves. Oscar Ungo, go ahead.
Hey everybody, good morning and good afternoon. My name is Oscar Ungo. I'm an account executive here. I've been here for 6 years now, and I'm part of the inside sales team. I'm excited and I appreciate everybody joining us because, as a loan officer once put it to us, you cannot walk into an office of realtors and not walk out with a loan when you discuss the debt service coverage ratio program. So I look forward to getting started.
Yeah, great. And then we have Javi Naranjo on here, who's also in the same office near Oscar. So Javi, please introduce yourself, please.
Thanks, John. Hey guys, I'm Javi Naranjo. I'm actually right next door to Oscar over here. But I'm really excited to talk about the DSCR program. This is my personal favorite, and I just want to get right into it.
Yeah, thank you, Javi. Appreciate it. Again, so before we get into the program, let's do a quick poll. Hold on, can I launch this? I'm gonna move a few things around here. We're gonna do a poll. Who has originated a debt service coverage ratio in the last 12 months? So a couple of stats here. 36% of the homes are owned by investors. Single-family resident homes are owned by investors. So that's a great stat. And as Javi and Oscar mentioned, I did a realtor presentation on Tuesday here locally, and yes, the account executive I was with walked out with a debt service coverage ratio loan. So, okay, wow, 73% of you on this call have not originated a debt service coverage ratio in the last 12 months. That's big. That's probably one of the highest numbers we have, but which is great. That's why everyone here is on this call. Yeah. So we're gonna, but by the time we're done today, you could be an account executive at Angel Oak. So let's get into it right now. So let's go right into our debt service coverage ratio. Oscar, cover some of the highlights, and hold on, see if I can get this poll out of the way. Can you guys see what's up here on the screen? I apologize.
Yeah, we can.
All right, go ahead, Oscar. Give us some of the highlights, please.
All right. So for those who don't know what DSCR stands for, it stands for Debt Service Coverage Ratio Loan. We call it our investor cash flow program. And what it provides is solutions for your clients that are looking to purchase or refi an investment property or properties. The solutions that it provides are the key ones that typically decline a loan, right? So number one, there is no debt to income on this program. So that's one huge solution. We're going to go into what needs to be and what doesn't need to be on the 1003. One of those is income. So there is no income, we don't look at liabilities, there is no DTI on the product. Everything is going to be based off the subject property cash flow and whether it cash flows or not. And we'll get into the nuances of how we calculate an expense ratio next, but first I'm going to cover the highlights of the program. So we've made leaps. We're always making enhancements, including today. Some of those enhancements, we now go up to $3 million. So up to $3 million on the debt service coverage ratio program. The minimum loan amount is $100,000. The minimum credit score on the program is a 680. We go up to 80 LTV. And we can vest title in the name of an LLC. So your client can vest title in the name of an LLC, something that you normally want to ask if your client wants to vest title in the name of their LLC is how many parties are on that LLC to verify whether they're 100% owner or whether there are other parties on the LLC. The borrower must own a primary residence. So there are 4 pillars on the debt service coverage ratio that you want to cover before you take on that applicant. So the number 1, do they own a primary residence? Have they paid a mortgage on that primary residence for at least 12 months, or is the property free and clear? Number 2, credit, which we covered. We go down to a 680 FICO score, and we'll go further into other things that we look at credit when we review it. Number 3, do they have the assets? We need 6 months reserves on the subject property only, aside from the cash to close. And number 4 will be your debt service coverage ratio, which we'll go into further detail next. Most rates that we quote are going to be 30-year fixed unless your client wants an interest-only loan, in which case we do offer the 30-year interest-only option. A lot of transactions that we see are purchase and cash out. Those are very strong on this program. And you'll find a lot of investors that want to refi out of short-term hard money loans that just may want a rate and term refi. So that's a big opportunity for you all. Non-warrantable condos are an option. Condo tells, which is something that we rolled out recently, is an option and extremely popular. So we'll go into further detail on that as well. And in states that you are not licensed in, there are 12 states in total. We have them here on the website. You can do a business purpose DSCR loan if in those states. And lastly, we also updated, before it was reserved to permanent resident aliens and US citizens, and now we've recently updated that to non-permanent resident aliens being eligible for the program.
So thank you, Oscar. And a couple of questions already have come in. Ed, yes, this is being recorded, and we will get this out before noon tomorrow. So appreciate that. And this is interactive, everyone. So please, push your questions through our queue. We've got people answering them on the backside, and we'll also answer them here for you to everyone. So as I mentioned, Javi, we're gonna teach everyone how to be an expert on this program. So tell us what you look for on the loan application, and more importantly, probably because of this program, what you don't want to see on the application.
Yeah, sure thing. And before I go into the 1003, I just want to point out something on that interest only that Oscar said, is that the interest only qualifies on that interest only payment, which is a huge bonus. You knock off some dollars, helps out your DSCR a ton. And also, I just got a call literally right before this webinar from one of my loan officers. Shout out to Patty. She's in Oklahoma, and she just got a call for someone wanting to buy a DSCR in Ohio. Of course, if it makes sense, I mean, it's a business purpose loan, and just like it says there, she's not licensed in Ohio, and I let her know about this. It's a huge bonus to be able to do loans in another state that you're not licensed in. I just want to put a lot of emphasis on that. But yeah, I did want to go into the 1003 now. First point being that just like if you're going to cook or you're going to bake and you want to make something really good, you need a great recipe. If you want to do a great loan, you need the great recipe, which is your 1003. Guys, with an incomplete 1003, it's setting you up for fires down the road, and it's going to be a hassle later on. The main things that we look for when I open up that 1003, first things first is, like Oscar said, that home address is very important. Do they own, do they rent, or do they own it free and clear? Guys, you have to fill that section out very well, because what I look for in that is if they're renting, they need to own their primary residence. On a case-by-case basis, we'll allow sometimes if they own other investment properties, but our main guideline on this is that they must own their primary residence. This is really what we're looking for, and you need to make sure that's marked. Also, I look at that because I want to take a look at their primary home and compare it to that investment property. But I'll get into that a little bit later. The second thing I'm going to look at is, like Oscar said, income and employment. Leave that blank. This is no income, no employment, no DTI. It's an awesome loan where we save you a bunch of time by not looking into that. What we want to look at is the appraisal and make sure that this property works with that DSCR. Okay. Section 3. Yeah.
You don't want any job or any income information on that 1003.
None. I'm not trying to see that. Nope. If I see it, I'll cover my eyes and pretend I didn't. And then I'll tell you, get rid of it. Send me a new 1003 with it blank, because we do need it like that, for sure. And then I did want to go into the most important section for me is that section 3 of the 1003, which is your REOs. Guys, make sure that is filled out correctly. You know, a lot of these borrowers doing DSCR loans, they're not first-time investors. Although we do allow it, a lot of them own other investment properties. Make sure you're listing down those REOs. That's very important for us to know. Also, if they own investment properties, that helps them a little bit because we know they're a seasoned investor. You know, they know how to manage an investment property. They know how to manage a mortgage. We like to see all that. Now, if it's, I actually asked Oscar earlier, and he let me know, a non-recourse loan, which means that it's under the LLC, you don't have to put those on there. You can leave those out of that 1003. Okay, and then the last thing I have for the 1003 that's very important is section 4, which is where I look at your loan. Guys, we do look at the property that the borrower wants to buy or refinance. I want to make sure that this property is going to qualify for you. The beauty of our Angel Oak Quick Qual is that your AE is going to look at this file and we're going to make sure that it's going to work in underwriting. Okay, and when we want to make sure it works in underwriting, we're going to look at the property, we're going to check what's around, we're going to check the rents in the area, and we're going to make sure that this property works for Angel Oak.
Yeah, so thanks, Javi. And one of the things Javi mentioned, and I want to make sure everyone's aware of this, 30% of the loans we close don't meet our guidelines. And that means people like Javi and Oscar, who are seasoned account executives, know how to get deals closed. So Oscar, talk about what you like to see trade line wise. What do you like to see on credit? And then we'll get into answering everyone's questions that are flowing in here. So.
Absolutely. So like Javi said, your account executive at Angel Oak, for those of you who have not done a debt service coverage ratio loan or who have not done a non-QM loan period and haven't worked with us yet, maybe because you haven't necessarily felt comfortable with the program because you don't know the nuances and the details of it. We work with you up front, and we're going to teach you shortly how you can submit your 1003 and credit to us in PDF format so that we can review it to check if the borrower meets the initial requirements. So part of that review is reviewing credit. Remember, I mentioned the 4 pillars of the debt service coverage ratio program, right? Part of that is reviewing credit. And so one thing that we review to make sure whether or not the borrower meets the minimum credit score for the program, which is a 680. We're going to look to see whether or not they meet the trade line requirement. Look at that, my light just turned off. We're going to look to see whether or not they meet the trade line requirement, which is 3 open trade lines for 12 months or 2 for 24, period. That's it. We're going to look to see whether or not what their mortgage history looks like over the course of the last 12 or the last 24 months. Reason for that is because we do allow up to a 30-day late within the last 12 months. We look at consumer credit history as well, and then we also check if there is anything reporting on credit that would indicate that there was a foreclosure, a short sale, deed in lieu, whether there was a bankruptcy, because we can go down a 36-month seasoning at a 75 LTV on any one of those. So those are the key things that we search for when we're reviewing credit.
Yeah, and just so everyone knows, obviously this is live and this is being recorded. So again, we'll get to your questions we're gonna start, questions have started coming in. So let's, we've got Reginald asking, does the investment property need, I'm gonna throw this one to you, Javi. Does the investment property need to be valued less than their primary residence? And again, this almost goes towards the 30% of what we do, we get exceptions, but go ahead, Javi.
Yeah, that's a great question. And, you know, I said on the 1003, we look at the primary home and we look at the investment properties that they want to cash, they either want to refinance or purchase. And the reason we look at it is, yes, for the most part, we like to see they're either equal or lesser in value. But guys, everything needs to make sense. If you tell me, hey, this is a resort property, it doesn't make sense for them to live there, you know, we're going to look at it on case by case basis. You know, he said 30%, that's a big number. If it doesn't fit, we do exceptions, guys. So still send it to us. We're going to take a look at it. It needs to make sense. But if it's valued higher than their primary, we might be able to work on it. Just talk to your account executive and they'll let you know.
Yeah.
John, I want to elaborate a little bit on that and offer a couple of examples, a few more examples. So what we're looking for, what we want to avoid, this program is meant for investment properties. So the rule is really, we look at whether or not it appears they're buying up, okay? So if they're living in a condo and they're buying their first investment property and it's going to be a single family home that's more in value, more curbside appeal within the same city, that would possibly be something that we just wouldn't qualify. Now, if I've had scenarios where someone owns a single family home, they're now looking to purchase another single family home that's higher in value, but when you look at their real estate schedule, which is why it's so important, like Javi said, to make sure that you include everything on there, we're looking for compensating factors. So on that schedule of real estate owned, there were other properties that were similar in value. So the borrower chose to live in their property, which we could see that they lived there for years, and they already had other investment properties that were similar in value. There we were able to make that exception.
Yeah, great point. Thank you, Oscar. So Javi, another question here. Is there a limit on how many people can be in the LLC? That's by Dustin. Thank you, Dustin.
Yeah, so there really is a limit. We want really 2 to be the max. If there's 3, sometimes we'll make an exception, but 2 is our max for that LLC. And both of them do need to be on the loan if they're both owners of that LLC.
Yeah, and just so everyone knows, and Melissa asked this question, which is a great follow-up question to this, is yes, it does have to be for the purpose of owning and managing real estate. So the LLC cannot be, you know, John Jeanmonod's Plumbing LLC, and you know I'm trying to manage real estate and buy and own and manage real estate. So Oscar, we have Richard asking a question, and I think it's really for seasoning, maybe to use appraised value. Is there seasoning requirements for a recently acquired property?
That's a great question. So we only require 6 months seasoning to use the appraised value. There is no seasoning period to get cash out, which is delayed financing, but on a recent purchase. So that would be less than 6 months ownership, but we will use up to the highest LTV that they qualify for, and we're going to use the lesser of the purchase price or appraised value. Typically, it's going to be the purchase price.
Yeah. So Javi, another great, thank you, Oscar. Javi, another question. You know, we talk about, you know, it sounds like it's for a seasoned investor. Is this eligible for a first-time investment property?
Yes, 100%. If they want to get their first investment property, we allow that. Do not turn them down. Give us a call. Don't let them walk away without trying the DSCR program first.
Yeah, great. And then another question, it hasn't been asked here yet, but Oscar, and it's a recent enhancement. What about gift funds?
I'm glad that you brought that up. So we do allow gift funds as long as it's from a direct family member, and 10% is the borrower's own contribution.
Okay, and then just checking on some other questions. So
hey guys, they do need to, on a gift fund, I just wanted to say they do need to also have the reserves covered by the borrower themselves. So it's going to be 10% of their own and reserves.
And while you're hitting up on reserves, Javi, how many months in reserves do we require?
6 months. And if they're doing a cash out refinance, that cash out can be used for reserves as well.
Yeah, that's great. And Oscar, you touched on, this goes back to an earlier question about the seasoning for appraised value. Talk about delayed financing in case that person wants that money back and maybe they paid cash for the property.
Yeah, so clear, very common scenarios that we see on the debt service coverage ratio program is someone has just purchased their property. They now want to get money back so that they can go buy other property. And whenever, like we said earlier in the call, we can present with you to realtors. Many times that we teach realtors how they can help their clients, your customers, leverage their equity in recently purchased properties with less than 6 months ownership, right? To now go buy more real estate by taking that cash out to go purchase more.
Yeah, and you might have, Javi, you might have to look at the matrix because Gail's getting kind of clarified. Oscar touched earlier on allowing a 1 times 30 on a mortgage. What about consumer rates?
On consumer rates, yeah, for sure. So we allow 2 times 30 in the most recent year.
Yeah, Gail, great question. So we know stuff happens, so a couple other questions coming in here. Let me see here. Oh, Oscar, I'm going to scroll down a little here, Oscar. Let's talk about the debt service coverage ratio.
Yes.
And how we calculate it.
Let's talk about the debt service coverage ratio.
Okay.
So again, everybody, it is just a complex way of saying, does the average market rent cover our total housing payment, PITI or PITIA, right? Does it cash flow positive or will it cash flow negative? And the great thing is that we always say this program is nearly bulletproof because we do allow negative cash flow. So there are many ways of structuring a loan as long as your clients have the credit and they have the assets for it. All right, and this is something that you'll cover with your account executive up front again, when they issue you your pre-approval. So let's cover a purchase. Let's say, for example, your borrower wants to buy a single family home. You're going to order a 1007 with that appraisal. The appraiser is going to go out there and they're going to look at like comps for value purposes, but they're going to look at like comps for the purposes of coming up with an average market rent. That average market rent is going to be placed on the appraisal, or underwriter is going to look at it, and then they're going to divide the average market rent by the total housing payment. Okay, so let's say that the average market rent comes in at 1,000 and your total housing payment's 1,000. That means that you've broken even, and with that we can go up to 80 LTV. Now, what happens if your average market rent comes in at less than the total housing payment? Does that mean that that is the end of the road? It does not. We can still help you structure the loan. If the DSCR is less than 1, which is break even, sometimes your borrower can buy down the rate. Sometimes they just have to put a little bit more towards a down payment to reduce the loan amount. But there are times when, for example, let's say that the average market rent is 800, but our total housing payment's 1,000. When you divide those two, you get 0.8. We can do that loan as long as your client has the credit and they have the down payment. So the minimum credit score there is just a 700, and we can go to 75 LTV.
Yeah, and don't forget, oh, sorry, go ahead, Oscar.
What happens if it comes in at less than 0.8? Is that the end of the road? It is not. Again, if it comes in at less than 0.8, so let's say 400 and we're at 1,000, then if they put the additional 5% down, if they have a 720 score, so now we're at 30%, 70 LTV, we can help with that loan. And so in this example, we're looking at an annual term, so a 12-month lease with a 1007. However, we do also allow short-term rental. So if the appraiser designates that there's potential short-term rental income here, we can do that, but then the minimum DSCR is 1.
Yeah, and don't forget what Oscar mentioned earlier about gift funds too. So if it is going to require more down, we do allow that gift fund. We got a ton of questions coming in here. So we had Alana is asking, what about someone who owns 0 properties and looking to purchase an investment property, Javi?
A first-time home buyer is what it sounds like. Guys, we don't allow first-time home buyers on this program. They do, like I said, either need to own a primary residence or case by case, if they own a lot of other investment properties, we'll look at it in lieu of that primary residence.
Yeah, so again, I think the most important thing here that Javi and Oscar are sharing is contact your Angel Oak account executive, and let's go through that scenario. We have an AE out west. He goes, I love scenarios, right? So, and Alana's asking another question here, Javi. Is there a prepayment penalty on the debt service coverage?
Yeah, so there is a 3-year prepayment penalty. Okay, you can either buy it down, buy it out, or you can even add a 4th year and get a little bit of a rate incentive on that 4th year. But it is 3 years, and that's just 6 months of interest for that prepayment penalty.
Yeah, we've got some smart LOs, some smart questions coming in. Tony's asking, is there any seasoning on the length of time for that LLC, Oscar?
There is no seasoning. So, you know, if let's say some scenarios, sometimes we see these examples where a borrower wants to vest title in an LLC. The first one they provide, maybe they have a partner on it. You know, they can just create a new one and in their own name, being 100% owner, and we can invest title in that LLC.
Yeah, that's awesome. And then Joe's asking here, Javi, I know you said there are no reserves on the borrower's primary, but do we require reserves on existing investment properties?
No, so the reserves are on the subject property, 6 months, only subject property.
And then Oscar, Jeff's asking, what's the seasoning on down payment and reserves, and how long do they have to be seasoned for?
Just 30 days.
Yeah, really good questions. I know we're yeah. Sorry,
Sourcer seasoned for 30 days.
Okay. Javi, this is a great question. We talked about what's the LTV on a single family cash out refinance from Eddie?
So we can go up to 75% on a cash out on DSCR. They'll need at least a 700, but we go up to 75% on that cash out.
Yeah, and a lot of times we'll see, you know, cash out, these come in multi-packs, and everyone says, oh, why would you do a cash out, you know, if I get out of a rate of maybe that's in the 6s or 7s and whatever, right? But you're going to go purchase other investment properties. It's just, you know, it's really, I mean, we see these come in multi-packs a lot. So a couple other questions.
Yeah, can we elaborate a little bit more on the refi side of it? So like you said, you know, if I was in everybody's shoes, I would go after refis on the debt service coverage ratio program, because you are helping people that are in short-term hard money loans refi out of them. And typically, like John said, again, we're looking at the transaction. On the refi side, we see colleagues of yours, loan officers, they're helping borrowers with multiple loans at a time. So it's a really good way of helping somebody refi multiple times at once. It's a great way for you to build your pipeline quickly. We can help with up to 5 finance properties with us and more with exceptions. I've helped a loan officer with, I believe it was up to 11 properties that they got from one borrower. So these were 11 loans that they helped refi. And the great thing about refis versus a purchase is that on a purchase, everything is going to weigh on the appraiser's opinion of the average market rent. But on a refi, all you have to ask your client is, send me the lease agreement. And once you have that lease agreement, we're going to teach you how you can price out your loan. You can just get your rate quote, put together insurance, taxes, and make sure that you put together your total housing payment, and then do the math. And now you structure your deal, and you know how to structure it, and it's going to run smoothly. Or is that property Airbnb? All right, in that case, you don't need a lease agreement. You just need to collect the Airbnb transaction history.
Yeah. So Jamie,
And if I could just say, John,
yeah.
if I could just say that, guys, this is like you go to McDonald's, you order combo number 5, you get a cash out on one property, and they might use that cash out to buy another one. That's 2 loans right there. You could build, like Oscar said, build your pipeline. You know, combine those. Tell them, hey, yeah, get that cash out with the DSCR, and how about we just buy another one with that same program? It's genius to me.
Yeah, and who's going to be happy about that are your referral sources when you come and share with them what you can do with the investment property. So, Oscar, I know you asked, Jamie had a question here and you answered it. Hopefully that answered Jamie's question regarding does there a lease on an existing property. Javi, what's the minimum loan amount?
Minimum loan amount is going to be 100,000, guys.
And this is served up so nicely. Thank you, Sharon. Is there a limit on how many properties the borrower can own financed, Oscar?
There is no finance property limit, and they can finance up to 5 more with us or $3 million in loans on aggregate. And like I said, we've done even more with exceptions. So please don't turn down any of those scenarios. Call your account executive. You know, if they're compensating factors and they're good loans, we're going to help.
Yeah. And Jay, we're going to get to where you can get rates, 24/7. So maybe this is a good transition, guys. That we'll go to. Let's talk about foreign national. Javi, I think you're going to take over the highlights of our foreign national program, and we're not going to spend too much time on this because it really does fit on the program we just talked about. So go ahead, Javi.
Yeah, and honestly, guys, this is an awesome program. And let me just start off by saying this isn't ITIN, this isn't DACA, this isn't non-perm. If you guys have any of those borrowers, contact your AE still. We have programs for them that isn't this. So a foreign national is a borrower living outside of the U.S. that wants to buy an investment property here. And the way it works is that we're going to use that same DSCR program with the 1-to-1 ratio, working the exact same, and it goes down to a loan amount of 100,000. Now, one of the awesome benefits is that there's no foreign or U.S. credit needed, and then we go up to 70% LTV on this. Okay, there are a few requirements on this, like number 1, ACH auto payment is required, 12 months reserved, so that's a big difference there. And then also assets need to be sourced and seasoned for 60 days, right? Now, in those 60 days, 30 of those days, the most recent 30 need to be in a U.S. FDIC insured bank. Okay, that's a big thing to write down. Okay, now, although they live outside the U.S., they must have these eligible visas, which you see there are listed. There's B1, B2, H2. Those visas, they're available on our website. You don't have to memorize them. We're not going to quiz you on them. We have it there for you. Okay, and then no gift funds allowed. But this is an awesome program, especially if you're getting calls from people outside of the U.S. like this is meant for, and a lot of places where borrowers are just know that there's a lot of movement, a lot of rentals going in. They're looking for properties here in the U.S.
Hey, and I don't know if you touched, Javi, I'm getting some feedback here, but I don't know if you touched on the visa waiver countries.
On the OFAC, the sanction list?
No, just about countries that are visa waiver partners like Canada, United Kingdom, that will do those with just a valid passport.
Yeah, just a valid passport is needed for those countries. Canada, I believe it might be Mexico also is one of them, and Great Britain.
Yeah, so that, and like I said, this is great. A 1003, you're not putting an income. We're not requiring to build credit. We're just qualifying this borrower just on how the subject properties go into cash flow. So, I don't know anything else, Oscar, you can add to here that would,
This is just a more streamlined, debt service. It's just more streamlined. There are no mortgage reference letters. Sometimes I get asked, is it really that easy? Yeah, it's this simple. So people, that's really it.
We're going to get to the tips and tricks portion, and marketing here in a little while. But one of the things I always point out when we talk about foreign nationals, with all this geopolitical strife going on in the world, a lot of people are looking, 1, to invest in the United States in U.S. real estate, and then 2, they send their children to large universities here. So as you're thinking about marketing yourself differently than just I've got great rates and I've got great service, why don't you look around some of the larger universities, because they're sending their children here to study abroad, and they're usually trying to purchase real estate. So that's just my little public service announcement here for Foreign National. So let's go. Oscar, you're going to take us through our quick quote, and I'm going to go back to the home page so we can show everyone where they can get to our quick quote tool, which is super dynamic.
Super dynamic. So there are two places you can click on to get to the quick quote tool. On the home page, Angel Oak MS for mortgagesolutions.com. You can click on the top right next to broker login. It says non-QM quick quote, or directly in the middle, or John was just highlighting, it says non-QM quick quote, and there's a check mark on it. That's how I like to remember it. So once you click on it, it's going to default to the channel type being broker, or if you're non-Del, you would click that. Then you start by entering your scenario. So type in your loan amount.
I'm just going to type in some stuff here, Oscar, and you can.
You don't need to type in any commas or periods. And as you fill it in, it will begin to take the information. For income documentation, this is really important. I like to highlight this. It always defaults to full doc, and full doc is tax returns or W-2s and pay stubs. Remember that this is a no income loan. So you want to choose the debt service coverage ratio program. It'll be the last option at the bottom, DSCR investor cash flow. Once that happens, remember that we mentioned that there are states that you can do these loans in that you may not be licensed in. So it's going to ask you if you have an active state license in that state, you would choose yes or no. And when you're done with that, you scroll a little bit further. Everything else auto fills. It's gonna the prepayment penalty defaults to 3 years, like Javi mentioned. If you choose right now, we have an incentive, a quarter off with a 4-year prepayment penalty. In states where there is no prepayment penalty, well, we won't have one. So you would choose remove for that option, and then the compensation type defaults to borrower paid. You can click that option and choose your lender paid comp plan as well, so that you can see the rate stack. But let's price this out as borrower paid for now. And then the program.
Oscar, I'm going to interrupt. But one gentleman here, Eric, is asking, are we okay with waiving escrows?
Yes, we can.
Okay.
And so if you wanted to, then you would there's a escrow waiver field, and you choose yes.
Thank you.
Okay. And as I mentioned, and we mentioned earlier about the interest-only options, well, right below escrow waiver, there's a field for interest-only. So there's where you would indicate whether you want interest-only priced out or not. And everybody, this is the first step to submitting your 1003 in credit to us. So now you're indicating to us what to use. You're not locking the loan at this point. This is for you to view the rate stack, okay? So now you view the rate stack, anything less than 100. Remember this, right now we're pricing borrower paid, so your comp is not financed into the rate. There's no yield spread premium here. Anything less than 100, you're seeing the cost. Anything above 100 is a credit, reducing total closing costs. When you indicate what rate you want the quote for, you would scroll all the way to the bottom, and then you would click the blue button, select option. It's going to take you to step 2. It may look like a blank screen. It's not. Scroll up.
Oh, sorry.
And when you scroll up, it's going to ask you for your MISMO 3.4. You can upload this, or you can skip this step by clicking next. And this is the final step where you're going to choose your account executive. If it's me, then you would click the drop down. All you have to do is type O on your keyboard. It'll select Oscar.
There you go. The one and only.
And then just by filling in your information, and then just upload your 1003 in credit. You can drag and drop it, or you can click right in the center, and it'll allow you to browse for that file for both the 1003 in credit. There are some other folders for you to upload information, as long as that 1003 is like Javi said, the perfect recipe, right? The DNA of the loan. If you give us all the information, we generally don't need the 1008. We don't really need any other additional documentation. Last but not least, we call it the confessions box, right? This is for our eyes only, being the account executive. If there's anything else that you need to let us know about the file, any comments, right? Fill them in here. We do go over a lot of scenarios on a daily basis. We can't store them all in our memory as much as we want to. So this is a great way of reminding us. If you, by the way, your 1003 does not have to be signed, and the property address can be TBD. If you can't print out your 1003 with a property address on there, then it can be TBD. And if you can indicate in the comment box what that address is, if they already have a property in mind. Okay? And if they don't, that's perfectly fine too. We can give you a pre-approval for a TBD property as well. Once you're done with that, click submit. Just wait for it to refresh and say successfully submitted. That means that you're in line for review. We're going to take a look the same day.
Yeah, Oscar, so a couple of quick things here, Oscar. One, I think that TBD is huge, right? Not only just for DSCR, but it's even bigger when it comes to bank statements, because we're calculating that income for you. And we'll talk about that on October 12th. So not to get sidetracked here. But, how long does it take, and specifically for a debt service coverage ratio, how long does it take to do a pre-qual?
It should take less than 15 minutes. If you give us all the correct information, so we don't have to pick up the phone and hound you for more information, then it should take us less than 15 minutes. And we're going to send you what I like to, the analogy that I use is your findings, right? We're going to send you a needs list as well, so that you know what to collect from your client to prepare to submit your loan to underwriting. Everything will be there, and you can, and your AE will cover everything with you. So we're going to put you in a position to submit your loan and get a clean conditional approval.
Yeah, I want to just share with everyone, obviously you could tell how professional Javi and Oscar and all our account executives across the country, they are not going to produce a pre-qual if they are not 100% certain with everything, the 1003, the credit, any hiccups that they have, because they have a help desk to go to if we have to get that exception. And that exception is going to follow that loan throughout the entire process. So just want to make sure everyone is aware of that. Couple other things here. Jay asked, and I can answer. Jay, I thought we covered this on the foreign national, Javi. We don't require a credit score for that foreign national, right, Javi?
No, we don't. Foreign or U.S., we do not require any credit score.
Yeah, and Thomas, that's the next thing we're going to go into is marketing. I know you got here a little late. This is going to be recorded. This will be sent out tomorrow before noon. So thank you for joining us, Thomas. And then, all right, let's go, Javi. Let's go to your favorite part, our favorite part, Oscar, every AE's favorite part in the company.
Yeah. So right there, you see broker login. Okay, that broker login, each of you can get your own credentials. Just ask your AE how to get it. And when you get your credentials, you're going to be logging in exactly how John is doing right here. And I did just want to say while we're doing this, guys, did you guys notice how easy it was to do one of those quick quals? It is so easy. I wish I had that was easy. One of those buttons that Staples used to have, because that's how quick it is, quick and painless.
Hey, Javi, to that point, Jerry Calderon, our account executive at Tampa St. Pete area, he says his 8-year-old daughter runs scenarios on the quick quote. So it's
so easy and 8-year-old can do it. Yeah.
Awesome. So as you see, John went ahead and logged in, and you'll see this is our TPO portal. This is where you guys will be able to see your pipeline. You'll be able to add new loans, and most of all, like John said, my favorite, the marketing portal. Right above, you'll see the little drop down. And John, if you could just hover there for a second, you'll see you have presentations, you have whiteboard videos, flyers, and social media posts. Guys, we give you everything you need. And John, if you could go into the social media section first. This is my personal favorite other than the flyers. But this social media section, guys, if you guys are a mortgage broker without a social media profile, guys, you guys are missing out. It's like a roof without a house. You guys are missing the most crucial part. That house is not covered. You guys aren't done yet. Get that social media profile, get on Instagram, get on Facebook, get on Twitter, and start posting. People won't know about you until you're letting them know. So what we provide for you is the post. You guys don't even have to think. You guys just copy and paste and post. We have We have the actual jargon for you with the perfect caption for the perfect picture right there, as you see. Whether it's investor cash flow, all of our programs are available right there. And as you see, we target it towards borrowers and realtors. So it depends who you're trying to go after. We have it for you.
Yeah, Javi,
Okay.
we talk, and it's on our homepage. We talk about serving an underserved borrower, right? Well, this is where I kind of get a little crazy. This is an underutilized portal, and it's really. And Oscar, we'll bring it. How much does it cost to access our portal?
It doesn't cost you anything to access the portal, but like Javi said, what is the cost of not promoting yourself and not letting your referral partners know that you have access to this program? Because they're looking for ways to grow their own commissions.
Yeah, and again, we've done the work for you. We have a Christy in San Antonio says, Angel Oak has invested in your business with this portal. And I love that. I mean, it's just, but it's underutilized. And I promise you, if you use it, you will get business.
Yeah.
All right.
And John, honestly, yeah, I just wanted to say, guys, if you're not doing this, somebody else is. Don't let them take advantage of stuff that you have. Get out there and use this. So the next thing I wanted to cover is going to be our flyers section.
Yep.
This is probably our most utilized tool that we have in our marketing portal. These flyers are awesome because eventually the internet might go out at some point, and what doesn't go out? Paper. You guys are going to be able to hand these out if the internet ever goes out, and they won't be able to just not see it. It's there. So what we do is that we provide flyers for all of our programs. And if you go ahead and open up our investor cash flow program, you'll be able to see that these are fully customizable, guys. We can add your name, your NMLS information, which is your ID, and your states that you're available in, your company logo, disclosures, and you'll see it all here. It's free marketing. It's super easy to use. We give you all the summaries there. And the best part is that once you put this in once, you don't have to do it again. You know, inputting stuff gets tiring. I know it's a first world problem, but honestly, guys, we saved you guys from that. It's crazy.
I didn't know we were doing stand up here, Javi.
So you're able to type in your information. Yeah.
I just typed in my name, Javi. Look how quick it changes.
Quick and painless, and it's there with your credentials for as long as you have those credentials, guys. And then one of the awesome tools is that if you look above that flyer, you'll see a drop down. So some of you guys are in states where there's heavy Spanish speakers. There's a lot of Spanish speakers, and you need to market to them as well, whether it's realtors, whether it's borrowers. We also have flyers in Spanish available for you. And the best part is if you were to click any of the flyers, right, your information transports. Like I said, you don't have to retype it. It's all there for you. And it's great flyers, guys. I've never heard a bad review from one of our flyers in the time that I've been at Angel Oak.
Yeah, this is, Travis is on this webinar. I think he was on our last one too. He loves the flyers and he's using it. And Travis, I believe he's kind of new to the business. He's using it to try to grow his business. So, why fish in a pond where everyone's trying to fish? He's going the non-QM route. So, So it's and awesome. You can see my name's here. It pops up. It took me 2 seconds to type it in. So,
yeah. And then the last thing I wanted to go into, the flyers are amazing. You put your own logo, but the most underutilized, I think, TPO marketing portal thing is the presentations for the realtors. These presentations are so underutilized, guys. Your AE wants to do presentations for you. I've done presentations. Oscar does presentations. Like Oscar said, if you walk into a realtor's office talking about non-QM, you're going to be leaving with a loan and scenario of non-QM. These programs are amazing, especially DSCR. Everybody loves it. So we provide you not only flyers for it, but a whole presentation. Whether you want to do a quick one, a long one, it's all there for you.
Yeah, like I started earlier today, Javi, I was just, across town on Tuesday, and, a couple of loan officers that do business with us, took me and Armando to the realtor's office, and we both presented, and they couldn't have been more appreciative. And the realtors, you know, you're all on this call, and we had, what was it, 73% have not originated a DSCR loan in the last 12 months. Well, can you imagine if 73% of you, imagine what percentage of realtors don't even know about these programs, right? So
Yeah.
it's really, I was hoping the presentation would pop up, but because I wanted to show, you know, where do you find these? Oscar mentioned it earlier, hard money lenders, right? I have an AE here in the Metroplex. Just do a search. Just do a search for real estate investment clubs in your area. We had, I think, 12 to 20 pop up here just in the Dallas-Fort Worth area.
Wow.
Yeah. So, but I know I want to be respectful of time. We got a few minutes left. Looks like the questions have slowed down. So just before, this is going to be recorded. We will get this out to you before end of day today. If we did not get to, we had a lot of great questions here. If we didn't get to all your questions, we will have an AE reach out to you and contact you to make sure your question or scenario gets answered. So, Javi, anything in closing?
Yeah, 100%. Guys, lean on your account executive. I think our Angel Oak account executives are the best in the business. And I'm not being biased. It's just the truth. We are the best at what we do. So reach out to us. We'll help you on your scenarios. If you guys are stuck with the borrower, don't know where to put that borrower, we'll tell you the truth. If it doesn't work with us, there's no reason to waste your time. We'll tell you, we want to make your deals work, guys. So lean on your AE. We really are the best at what we do in terms of reading your 1003 and credit report, knowing the files. We're there for you guys. Just reach out, whether it's for presentations or your files, reach out.
So, Oscar?
Well, for those of you who don't know who your account executive is, I encourage you right now to just type into the chat that you want to know or that you want to get in touch with your account executive. We will get them assigned to you. They will get in touch with you today. And for the 73% of you who have not done DSCR loans, I hope that today you feel more confident speaking about the debt service coverage ratio program with your referral network, with your clients. Like Javi said, we are here to continue educating you. So if you want to set up a conversation or a follow-up training, we'd be more than happy to. You do not even need to be signed up with Angel Oak. We'd be happy to do that. We'd be happy to discuss a scenario that you may have today. Even if you're not signed up, we can look and we can review your 1003 and credit before you even get set up with us. And that process is very simple too. So reach out to us. We're here to help.
Yes, yeah, thank you, Oscar. A couple of things that Oscar said there, and Javi, you know, I didn't have to go on that. I love going on those realtor presentations because you see the light bulb come off, right? It's like, yeah. Holy smokes, I can't believe I didn't know about these programs. So, I always throw a statistic out there. If you get 12 realtors in a room, you're going to get one of their loans, whether it's a bank statement loan or it's a or it's a DSCR loan. The AE for Angel Oak that goes there with you, whether it's in person or via Zoom, is not going to say anything about Angel Oak. They're just going to refer everything back to you. I'll use Jamie was on this call and he's asked a lot of great questions. So Jamie, this is how this presentation looks. We go in there, we talk, hey, to the realtors, this is a bank statement loan. These are the characteristics of a bank statement loan. These are the self-employed borrowers. And when you get a borrower like this, what are you going to do, Mr. and Mrs. Realtor? You're going to deliver that person to Jamie. That's how that presentation looks 100% of the time. I jokingly say we go in there like we're in the witness protection. We don't bring a badge. We don't give cards away, nothing. We go in there and we just tell them we're one of your investors. It's the most powerful presentation you can do today, especially in this market. Secondly, use those marketing materials. As Oscar said, I'll give you my email address right now. If you don't have an AE, I will get you in touch with your AE. My email address is simple. It's John, John@angeloakms.com. So send me an email today. I'll get you in touch with your account executive today. Shameless plug here. There's a survey afterwards. Please let us know what we can do better. October 12th at noon Central Time, we'll be doing a bank statement deep dive into that. For those of you, for Javi, I know I'm getting time's running out. It's like the Oscars here, but Javi, thank you so much for your time and effort and energy today. Oscar, same with you as always. You had a couple fans on here, Oscar, today, so obviously you've got customers who sent in on here. So for those of you who are our customers, thank you for your business. For those, give us a shot at your business. I promise you, you can tell by the talent that we have here, you won't go wrong. So on behalf of everyone here at Angelo, thank you and have a great rest of your day and month. Thanks, guys.
Have a great day.